You're watching Business Incorporated live on Channels Television. Coming up, as a cash crunch bites in Nigeria, President Muhammadu Buhari says old 200 Naira notes remain legal tender till April 10th, 2023. In Ghana, inflation unexpectedly slows for the first time in 20 months. And Egypt's total external debt fell by $728 million in the first quarter of the 2022-2023 financial year. Hello and welcome to the program. I'm Ladi Williams. First off, let's kick off what's happening with markets, starting with the African continent there. We see it's mostly positive sentiments right there. We see the NGX today at intraday up 0.03%. Yesterday was down about 0.04, so we're seeing that back and forth movement at intraday. South Africa's GSC index, that's up 1.23%, 80,447 points, staying above that 80K level. See if it goes deeper into that level going forward. EGX 30, that's up over 0.5%. And we see Kenya there, the Kenya index closing positive yesterday, snapping the losses we saw in the previous trading sessions. Moving over to the Middle East now, we see it's mostly negative sentiments right there in the Middle East, quite mixed in the UAE, 9,976 points. That's for the Abu Dhabi index, down 0.13%, and we see the Dubai index down marginally by 0.06%. And in Saudi Arabia, it's also marginal decline there, 0.02. Qatar index, that's the big mover, up 1.83%. We'll see how markets close there in the Middle East at the close of trade today. Let's move on to Europe now. See the EU is proposing more export bans for Russia, this time targeting critical technology and industrial goods. Now we have joined us Janelle Dumoulin right there in Berlin. So Janelle, tell us more about this latest proposed round of sanctions.
So these are new proposals brought forth by European Commission President Ursula von der Leyen, and they're meant to be worth around 11 billion euros. And the aim is to enact export bans affecting vital goods, including electronics, specialized vehicles, machine parts, spare parts for trucks and jet engines, as well as construction sector goods that can also be used by Russia's military, so like antennas and cranes. In addition, the EU also wants to put controls on 47 new electronic components that can be used in Russia's weapon systems, including drones, missiles, and helicopters. Rare earth materials and thermal cameras are also on the list. So with this, the EU is hoping to ban all tech products found on the battlefield. It's also adding Iranian entities to the Russian dual sanctions because of Iran's supplying of drones to Russia. And that's significant because it's the first time that third country entities have been added to the Russian dual-use sanctions, and it's meant to serve as a warning to other companies and international traders.
And Janelle, we already have 9 sanction packages still in play right now. How did that impact them?
Indeed, there are already various measures in place. Remember, in the very beginning, there were financial sanctions. We saw asset seizures for various figures connected to the Putin regime. A European Union ban on imports of Russian crude by sea came into force on December 5. For Western shippers still trading Russian oil, the EU and the G7 have now instituted a price cap. But the question as to whether the sanctions are working is kind of a layered question. On the one hand, it's a tool for the Western world to galvanize around and show Moscow that they stand in solidarity for Ukraine. But in terms of whether it's been enough of a hit to Russia's ability to access finances and resources to wage war, well, that's where it gets a bit more complicated. There's data to suggest that Russian tax revenues from oil and gas have been declining. Russia would not need Iranian drones if its own drone manufacturing industry were able to produce without Western components, so it's clearly not able to do that. But of course, the exact impact is hard to measure, especially given that some of these measures, like the EU embargo on crude products, has only been around for a little while. Russian hydrocarbons are still able to remain on the market. India and China have become big importers of Russian energy. And in fact, the Russian economy is even projected to see a little growth. As such, it's a mixed bag with the sanctions, and the EU is still going to have to monitor closely which mix of sanctions is triggering what consequence and how effectively.
Well, still a developing story. We'll keep tracking that. But what's going on with the markets today?
Well, investors are digesting a few earnings reports out here today in Europe. Just looking at plane maker Airbus, for example, it said that it posted record profits in 2022 despite supply chain problems limiting its ability to increase production. So net profit rose 1% to 4.2 billion euros. Airbus delivered 661 aircraft despite plans to hand over 720 because of those production issues. Now, here in Germany, meanwhile, Commerzbank has also just come out with its numbers, saying that net profit rose a better than expected 12% to 472 million euros in the fourth quarter, and that was helped by higher interest rates. So this represents a second consecutive year of full year profit amid a major restructure at the bank. It's been cutting thousands of workers and hundreds of branches in a bid to save on costs. And those are just two things happening on the markets here in Europe on Thursday.
All right, Janelle, thank you so much. Final trading day tomorrow. See how markets globally, trade for the final trading session. Thank you so much. That was Janelle right there in Berlin. Let's move on to Asia now. See, Asia Pacific markets traded largely higher today as investors digested Japan's record trade deficit of 3.5 trillion yen. According to Refinitiv data, investors also digested a stronger than expected U.S. retail sales report from Wall Street. And we see right there, it's mostly green with the markets. Nikkei there up 0.71%. The only downer, Shanghai Composite, down 0.96%, almost 0.5%, almost 1% there. HSI index, that's 20,987 points, down up 0.79%. And we see the Kospi, that's down up about 2%, closing there. ASX 200 in Australia up 0.79%, 7,410 points. Let's move on to the U.S. now. See, U.S. stock futures were little changed today as traders assess retail sales data that's pointed to a stronger U.S. economy. We know good news for the economy means bad news for the U.S. Fed there. So they're looking for bad news for the economy so they'll know how to pivot at some point with their rate hikes. And we see the futures markets there reacting marginally to all of this. At Dow Jones Industrial Average, that's down 0.03%. S&P 500, 4,155 points, down 0.07%. And we see the NASDAQ, tech-heavy NASDAQ, that's down 0.02%. Shares, Roku shares jumped about 9% after streaming. The streaming device company posted a narrower than expected loss and beat analyst sales expectations in its latest quarter. We saw Cisco Systems, the shares advanced by 4% after the digital communications firm reported results that topped analyst forecasts on the top and bottom lines. Keep watching those markets going forward. Now let's see what's happening with oil now. Oil prices edged lower today after a large build in U.S. crude inventories, but continued to trade in a narrow range as hopes for Chinese demand recovery remained in focus. We see Brent crude there trading down about 36 cents to $85.02 a barrel, while U.S. WTI crude futures, that was down about 29 cents, $78.30 a barrel. Prices were pressured by last week's larger than expected build in U.S. crude oil stocks, and stocks rose to the highest level since June 2021, according to the Energy Information Administration. And gold prices edge higher today due to a slight pullback in the dollar and the bond yields, although gains were kept in check by evidence of a resilient U.S. economy that could offer room for the Federal Reserve to raise interest rates even further. Spot gold ticked about 0.1% higher at $1,838 per ounce after hitting its lowest level since early January. On Wednesday, U.S. gold futures rose 0.1% to $1,847, while the benchmark U.S. 10-year Treasury yields eased while the dollar slipped 0.3% against its rivals after hitting a near 6-week peak on Wednesday, making gold cheaper for other currency holders. And the sign into law of the business facilitation bill by Nigeria's president has been accepted with anticipation by the business community. A member of the committee, Mr. Amala Omeke, believes that the clause, which deals with administrative bottlenecks, will be most impactful. Take a listen.
when you talk to businesses, one of the things that they will tell you is that, look, you want to get an approval from an MDA, for instance. It takes ages for you to get that approval. There's no certainty as to when you are going to get it. So, number one, it talks about things relating to default approvals. First of all, it says, okay, that you have to now publish some sort of service level agreement, right? What are the requirements by these particular MDAs? What would be the timeline within which you are supposed to give approvals? What are the products and services that you are even delivering as an MDA? And so it brings some level of transparency. Everybody would see that. Right, so that's number one. Then number two is it then goes further to say things relating to timelines. For instance, if you say you are supposed to give an approval within 21 days, for instance, or you are supposed to give an approval within 3 months, for instance, and you don't do that as an MDA, it is deemed that you have given default approval to such a process or to such an application. So what that does is to give some level of certainty to investors or to businesses or to anybody who would be dealing with these MDAs. And then that helps to remove these bureaucratic bottlenecks that you typically experience when you are trying to carry on dealings with these government parastatals.
And that was from earlier on Business Morning. But Nigerians in diaspora have been reacting to the scarcity of the Naira and President Muhammadu Buhari's directive to retain the old 200 Naira notes until April the 10th. The Chief Executive Officer of Africa-Canada Trade and Investment Venture, Kenneth Oguzie, who was on Business Morning, shares foreign investors' sentiment to the current disruptions. Do take a listen.
Or some of the recent policies around the money, the cashless policies, and things, how this affects investors being able to pull out their funds when they need to. But then everyone wants to be sure that if I invest in this country through partnerships or whatever it is, how sure am I that I wouldn't get into some trouble or certain things that would hinder my being able to access my fund or even move my business to the next level. So I can tell you for sure, a lot of people are paying attention, major political analysts, a lot of people are looking to see what direction is Nigeria going. How is some of these things, how are they going to pan out? And what are some of the ramifications for business and investment as a whole? But of course, there's a school of thought that would tell you that this is not alien to Nigeria. This has been going on, and investors are still trooping in. I think it just takes a different type of breed of investors, those ones that are more risk averse, those ones less risk averse, those ones that are typically used to, what we might call investing in quote, volatile economies. Because I think the rewards are there. We cannot take that away from anyone. And I think at the end of the day, like what we've seen in countries like Bolivia, where even with all the uprising going on in Bolivia, Indian investors are still going in there to invest in, sectors like the iron ore and all of that. So it just takes a certain type of investors with a certain mindset who typically would always want to go into countries like that. But at the end of the day, everyone is still hopeful. Everyone is expectant that, we'll get that sort of stability we need. And of course, we would be able to sort out and strengthen some of this judicial, institutional, legal framework, as we like to call it.
And that was Kenneth Oguzie there, giving us perspective from an investor in diaspora at this point. But we'll take a break now. When we come back, Commodities Market Update is next. Do stay with us. And for the commodities market update now, we see carbonated soft drinks have become a big part of Nigeria consumer staple portfolio. We've seen the price of 50 cl bottles increase from 150 Naira to 200 Naira since 2022. Let's get perspective now from Victoria Momo, analyst, financial derivatives company. Great to have you, Victoria.
Thank you for having me, Ladi.
So why are we seeing this price increases with carbonated drinks? Is it due to the general price, increases we're seeing in the economy?
Just like the general, the increase in price of other commodity, the soft drink prices have also, risen in tandem, albeit slowly. Right, and one of the reasons for the slow increase in the price of soft drink is because of the nature of soft drinks. Soft drinks are actually price elastic. the demand for it, the demand for it is actually, elastic, and manufacturers are, concerned about that demand for the product, and have not been able to fully pass on, the burden to consumers in form of high prices. So, like I said earlier, the prices also increasing in tandem with other commodity prices, but it's slower compared to other commodity prices. So the current price at 200 naira is not reflecting the actual cost of production for manufacturers, and that is because they absorb the cost of production and not transfer it to the consumers.
And definitely, we've seen the government, with that revenue drive through taxation. At this point, we've heard about the sugar tax. And I'm wondering, what impact are you seeing that having on the supply side and demand side at this point?
Well, at the current price of 200 naira, the soft drinks have seen a decrease in demand, and more people have they've tilted towards other substitutes, and realized that soft drinks now has, or excess consumption of sugar, it has dangerous effect on the health. And of course, when there is a decline in demand for a commodity, the supply for it actually reduces, and this is because the manufacturers, do not want to, have huge stock of, the soft drinks, and this is also reducing, the sales and the profits of the manufacturers. Already the 10 naira per liter tax on carbonated drinks is actually, affecting the producers' revenues, and shrinking their revenues. And the government also recently, proposed a 20% additional, tax on carbonated drinks, to get more revenue, and also to, reduce the consumption of sugar. And this is not a good thing for, the manufacturers of soft drinks, because it would also shrink their revenue, in addition to other rising costs of production that the manufacturers are currently battling with. The prices of their raw materials are rising. Raw materials like sugar, which is imported into the country to produce soft drinks. In addition to that, we have energy costs. We have the cost of importing machinery that are needed in operation. So the combination of all of these factors would continue to dent manufacturers' revenue, would continue to reduce the sales, and more importantly, low demand would also reduce profitability of the manufacturers.
All right, so much there for the producers to contend with. But thank you so much, Victoria, Mama Analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, so obviously good news, I could say, because the president, Muhammadu Buhari, has said that the old 200 naira notes will remain legal tender, but for a while. But you can still take your old 500 naira and 1,000 naira banknotes to the central bank to have that changed for you. Let's listen to the president now.
I'm not unaware of the obstacles placed on the path of innocent Nigerians by unscrupulous officials in the banking industry, entrusted with the process of implementation of the new monetary policy. I am deeply pained and sincerely sympathize with you all over these unintended outcomes. To stem this tide, I have directed the CBN to deploy all legitimate resources and legal means to ensure that our citizens are adequately educated on the policy. Enjoy easy access to cash withdrawal through availability of appropriate amount of currency and the ability to make deposits. I have similarly directed the CBN should intensify collaboration with anti-corruption agencies so as to ensure that any institution or persons found to have impeded or sabotaged the implementation should be made to bear the full weight of the law. During the extended phase of the deadline for currency swap, I listened to invaluable pieces of advice from well-meaning citizens and institutions across the nation. I similarly consulted widely with representatives of the state governors as well as the Council of State. Above all, as an administration that respects the rule of law, I have also noted that the subject matter is before the courts of our land and some pronouncements have been made. To further ease the supply pressures, particularly to our citizens, I have given approval to the CBN that the old 200 Naira banknotes be released back into circulation, and that it should also be allowed to circulate as legal tender with the new 200 Naira, 500 Naira, and 1,000 Naira banknotes for 60 days from February 10th, 2023 to April 10th, 2023, when the old 200 Naira notes ceases to be legal tender.
That's President Muhammadu Buhari extending the validity of the older 200 Naira notes. Let's move on to all the stories now. Obviously, Ghana's inflation rate unexpectedly fell for the first time in 20 months in January after the cedi strengthened. According to a government statistician, annual inflation slowed to 53.6% from 54.1% in December. And Egypt's total external debt fell by $728 million in the first quarter of the 2022-2023 financial year, according to the Central Bank of Egypt. Drop is the second in a row of Egypt's reported earlier external debt of about $155 billion at the end of June 2022, more than the $2 billion and lower than the $157.801 billion at the end of March 2022. And that's the show today. Thank you so much for watching. I'm Ladi Williams. Bye for now.